Hi folks, hope you all are doing well. I am Karan Bandal from Econosite, your weekly wrap on economic news from India and around the world. So let's get started. India is trying to become the new factory of the world. Well, let's start with the current factory of the world, China. How did China achieve this? When manufacturers started building factories in China, they started by building assembly lines. Then, gradually, these companies began developing local supply lines for the finished products in a backward integration of processes. China has built this manufacturing ecosystem over 4 decades. China has managed to build up a value chain so extensive that almost everything required to make a product can be sourced and acquired in the country. This allows for low cost manufacturing on a large scale. So, why would any manufacturing company be looking to leave China? Two things. One, to manage geopolitical risks, and two, supply chain diversification. In 2018 and 19, former US President Trump began imposing stiff tariffs on China to counter unfair trade deals with the US. China also retaliated, and that kicked off a trade war between China and the US. Many companies had started discussions on moving supply chains out of China then, but what truly provided extra fuel to the fire was China's zero COVID policy. Companies like Foxconn and Apple, Nike, Toyota, Samsung, to name a few, went all in on China and are now suffering because of it. This is where India comes in as an alternative. India's Prime Minister Modi has been working on attracting FDI, that is foreign direct investment, since he took office in 2014. FDI hit a record high of $84.8 billion in the last fiscal year. India has a large labor pool, a long history of manufacturing, and government support for boosting industry and exports. India's ease of doing business has improved significantly since 2014, and a lot of hard infrastructure has been built in the last few years. But unlike China, India is a large democracy with a hindering red tape, even with an improved ease of doing business index. There are many stakeholders that one needs to satisfy here, and it may take years for India to replicate the value chain that China has built over the last 4 decades. Add to that, companies may not go all in on one country again after their experience with China. Take Apple for example. Apple and Foxconn are investing heavily in India, but they are also investing in Vietnam and a few other countries. Many companies will adopt a similar model so that they are not reliant so heavily on a particular geographic location. This potentially may lead to creation of several manufacturing powerhouses instead of one dominant player. So, India will have to be wary of these developments and keep working on the domestic front while trying to be one of the major manufacturing hubs. In another related story, chip makers shift away from China. We are all aware of chips or semiconductors, right? All modern day devices we use have chips in them. From your smartphone, laptop, tablet, the vehicle you drive, home appliances like washing machine, microwave, refrigerator, to name a few. COVID pandemic disrupted supply chains globally, in which supply of semiconductors also got hit. If you were shopping for any such devices within the last 2 years, you may have experienced either a significant price increase or delivery delay because of unavailability of chips needed to manufacture these products. Add to that geopolitical tensions between US and China. Biden administration recently imposed semiconductor export restrictions on China. In October of this year, US began requiring companies to obtain licenses to export advanced semiconductors or related manufacturing equipment to China. Developments such as these are shaking up a $600 billion global semiconductor industries. Chip makers have become increasingly reliant on China and are now dealing with increasing labor costs in China, rising geopolitical risks, and disruptions caused by China's zero COVID policy. Leading chip making companies from South Korea and Taiwan are now looking to diversify their supply chains. India has been featuring on their radars according to KPMG. India has a growing pool of design talent in microprocessors, memory subsystems, and analog chip design. Labor is bountiful and costs are low. But as we discussed, India lacks efficient value chain that China has built over the decades. So, a country or a firm outside of China that is able to produce quality chips at competitive prices can emerge as a major winner in the future. Some Indian private players have begun to capitalize on these shifting tides. India's Tata Group to open exclusive Apple stores. Taiwan's Wistron is one of Apple's top vendors in India. Bloomberg reported in September that Tata and Wistron were in discussions to set up a joint venture to assemble iPhones in India. Then, a few weeks back, a story came out that Tata Group was in talks to buy Wistron Corporation's only manufacturing facility in India for up to around $600 million. Tata Group now plans to open 100 stores across the country that will only sell Apple products. Tata Group's Infinity Retail, which runs the consumer electronics store chain Chroma, will be an Apple authorized reseller and set up stores at shopping malls, high street, and neighborhood locations, according to the report. To wrap it up, let's look at inflation reports from India and the US. India's retail inflation falls. RBI, Reserve Bank of India, targets retail inflation to remain within a band of 2 to 6%. Since January of 2022, retail inflation has been overshooting RBI's target every single month. Previously, economists had predicted that inflation will cool to around 6% by February of next year. But there is a welcome development. The CPI based retail inflation fell to an 11th month low of 5.88% in November. It fell within the RBI's target range 3 months earlier than expected. This is primarily due to softening prices of food items. According to NSO, National Statistics Office, inflation in the food basket fell to 4.67% in November from 7.01% that was recorded in October 2022. The central bank does not project much relief though. They expect retail inflation to remain above 4% for the next 12 months. And now the US. Consumer prices up 7.1% in the US. US Labor Department reported that consumer price index or retail inflation rose 7.1% in November year on year. Even though this is well above Federal Reserve's 2% target for a healthy inflation level, this number 7.1% is the lowest inflation since January of this year. You can see here that the inflation in the US seems to have peaked at around 9% in June 2022 and it is now on a definitive downward trajectory. This is a major relief for capital markets around the world and their currencies. The US Federal Reserve has gone ahead with a 50 basis point hike in the interest rate this week, but with a relatively mild inflation reading and its downward slope, they may slow down the pace of rate hikes in the future, releasing some pressure on other currencies. In summary, inflation in the US and India is declining finally, and this trend should continue as long as we don't see any more shocks to the system like the pandemic, a major war, or disruptions in energy supplies. Consumers should see much needed wiggle room in their household budgets. On a global trade front, US and China are clearly at odds and will remain so for the foreseeable future. Companies that have gone all in on China and set up huge manufacturing facilities there are now in trouble. They are scrambling to find alternatives. India, with its competitive human capital, low labor cost, improving hard infrastructure, business friendly government policies, and more importantly, India's strategic partnership with US and other like-minded democracies offer a possible solution. I hope you enjoyed this week's wrap. I'll speak with you again next week. Until then, take care.